Welcome guys to IB Acquisitions. Today video we're going to be going over a $4 million revenue off-market plumbing company. We're going to be doing some preliminary analysis. We're going to be sharing some insights from what we spoke with some of the individuals in the company, and we have a few growth ideas for plumbing businesses as well. But before that, I'm going to send the link so we can get this for all the members in just a moment. All right, bro. I think it's that one. All right, and we have Ansi on as well. Let's go over his deal in just a moment. So this is a service-based plumbing company. We've seen that there's been a lot of people that have been asking for service-based companies, though we do have a picture of medical here. That should be the only one, but don't worry about that. So this has been operating for about 23 years. There's no competitors that we know of yet, as this operates at a local community level. Background, again, names here, business name, owner name, any name of any individual we mentioned, they're generic for privacy purposes. This is Precision Plumbing Solutions, and the owner is John Smith. It was established in the year 2000, and it was founded by John Smith, a master plumber with over 35 years of experience. The business has grown steadily, developing a reputation for reliable, high-quality service in the region. The company has a competitive advantage in its use of modern technology and environmentally friendly methods. The landscape is competitive with several other plumbing businesses in the area, but Precision Plumbing Solutions has maintained a loyal client base due to its focus on customer satisfaction. Now, one thing you have to understand about service-based businesses is that a lot of them, especially if they're run by older individuals, they don't have that marketing in place, and you want to capitalize on marketing. ANSI has a background in it. But think about it like this. When somebody moves into a new city, you move into a new city, you need a plumber, you need a technician, an electrician, HVAC, whatever it may be. What's the first thing you do? You don't go business to business asking, you Google it, right? And if they don't have a Google page or any online presence where you can reach them at, review the company, check the reviews from other individuals, and so on, they're less than likely to not receive that service. So that's why a lot of these businesses usually depend on word of mouth, which is really not the approach we want. If they don't have marketing, well, that's a value add. We can capitalize on that. Ansi, can you touch on that in regards to marketing for business and capturing clients?
Yeah, I mean, when it comes to marketing and not just capturing clients specifically, but when I look at a company and they're doing fairly well and they have somewhat of a good management in place, when I see they have no marketing, that's a business that I'm really interested in. Reason why is because if they have kind of okay management and they're doing good, they're cash flowing, but they have no marketing, I know automatically coming in there implementing any kind of marketing strategy is going to boost the top line, right? So that's I just want to touch on that. When you look at your businesses, at some of the deals that you look at, make sure you look specifically at the marketing because sometimes if it's a great operation but there's no marketing, again, that's a easy way to grow the company, right? So I just
Absolutely.
wanted to add that
Mhm.
part to it, man.
Matter of fact, we have another deal, which is a medical staffing company that grew significantly during COVID, and surprisingly, they have zero marketing budget. So that's a deal for another video, but it does touch on the topic that if a business is growing and is doing fairly well without the marketing, how much more can it do with it? Right? So let's talk about the business advantages. The business uses a combination of traditional plumbing methods and modern technologies. Now, this is very important. A lot of people, older people in general, have certain ways of doing things, and they don't like to deviate from it. Eventually, you have to catch up with the times. Things evolve, things change. And one thing that I do like to see in service-based companies or any business in general is that they're more modernized with their approaches. They're more efficient. I mean, if there's a lack of efficiency, that's another value add we can bring. But at the end of the day, you want to know they have that competitive edge and advantage. So they use trenchless pipe repair, high resolution sewer camera inspections, and environmentally friendly drain cleaning solutions. Now, if you've heard of any of these from any other plumbing businesses you've seen yourself, let us know in the comments below. Now, these technologies have helped the business maintain a competitive edge by offering efficient, cost-effective services with minimal disruption to customers. In regards to growth, the business plans to expand its market share through targeted marketing campaigns, focusing on digital platforms and local partnerships. They also intend to increase their commercial client base by offering competitive maintenance contracts and exploring opportunities in new construction market. I love growth. I love businesses that have a plan for growth. If these businesses don't have a plan for growth, again, another value add, but at the end of the day, you just want something that is stable coming in. You don't want to be doing too much, even though you can capitalize on it. But for your first deal, you want to ensure that sustainability. Let's talk about cash flow generation, some numbers. The business
Right.
generates. Mhm.
With respect to growth, when you're doing your first deal, it's really great that a seller would have some kind of growth plan in place. But 95% of the time, 98% of the time, they won't have a growth plan in place. So you can ask them, hey, what do you think, or how should we grow this business? They're going to throw a lot of things out there. Ultimately, it's going to be up to you and your team to actually present that growth strategy to the seller. And that's actually one of the roles that you have to play, sort of an advisor to the seller.
Yes.
So you have to take that role on, and it's going to make your value go a lot higher in the seller's eyes because you're actually bringing. I did this with the hyperbaric deal, you know this, Valentino, but
Yeah.
way before the closing, we were bringing up strategies, marketing strategies, growth strategies that we could implement right now to get it going. And then by the time we got to the closing, we were not just implementing; it was already there in place, and we were just making sure it's an operation that's going steadily.
Absolutely. Let me add to that. Like Ansi said, not only that, but it also builds rapport. It establishes your presence as an expert in the field because you got to understand the business owner has to have not only trust but confidence in the ability that you can run and pick up from where you left off. Ultimately, the business did produce X amount of cash flows, revenue with that owner in place, but will it continue with you coming in? So you got to keep those things in mind. The business generates cash flow through a mix of residential and commercial clients, including recurring maintenance contracts and one-time projects. The company has a 90% collection rate on account receivables, which I think is amazing. And I spoke with some of the people on the team to figure out how they have a 90% collection rate, and we're going to touch on that. Matter of fact, let's touch on that before we even skip over it. Let me get the information. So let's see. Mm-hmm. I asked them, I've noticed the company has a 90% collection rate on accounts receivables. That's very high. How do you achieve this? They told me, thank you for noticing our high collection rate. But essentially, they were telling me one of the reasons they have high collection rate is, first of all, they got clear payment terms. They set clear payment terms with clients from the outset, immediately from the jump, including specific deadlines and any late payment penalties that may apply. They have prompt invoicing. They issue invoices as soon as the work is completed and the products are delivered. That's another thing with healthcare. You got to be on top of that invoicing. If not, you're going to delay your payments with Medicare. They got regular follow-ups. They have dedicated accounts receivable team that keeps track of outstanding invoices and follows up with clients in a timely manner. Also, strong client relationships. Trust is ultimately one factor, and offering multiple payment options. So those are some of the ways they go about it and some of the ways you can implement with your company. I like that they have a dedicated team for receivables, because for those that have been in service-based companies know that the billing, you don't get 100% upfront. I think in California, the law is 10%. My grandpa used to have a painting and construction company, and they'd give him 10% upfront for the cost of materials. He'd go buy the materials from Home Depot, and then he'd come back, start working on it, and as he progresses throughout the project, he starts collecting a percentage of what it is to be collected upon, right? The total value. So you got to be very on top of that. If not, you can go along, do a lot of progress, and they might bail out on you and give you only 50%. I don't know, Nancy, if you have any experience with collection for service-based businesses, but they do base it on a performance. They don't give you everything up front.
I mean, well, usually the deals that I've looked at, they're usually on a net, I believe, like 45, max 50. That just means that's how long it takes for them to collect, to get payment from the invoices that they send out. So about 45, 50 days. You don't really, if it's above 55, 60 days, it's going to actually skew the financials. So what you're going to have is you're going to see in the financials in the P&L, you're going to have a lot of negative months. So be careful when you're looking at financials that have a lot of negative months, maybe 3, 4 negative months consecutively, then positive, positive, negative, that kind of a trend. That's usually the accounts receivable schedule. So if you're on a net 60, I mean, if you've collected for this month, obviously if you're on a net 60, it's not really going to reflect the next month immediately. So that's actually going to bring your cash flow is going to on the P&L, it's going to it's going to show up as a negative number. But that's actually not underperforming for the year for the business, if that kind of makes sense, right? So you have to watch out for that when you're talking about AR and what is the net they receive the actual payment. And Valentina, what was it? It was a test that we took, and one of the questions I believe is, what is it that allows the company to have immediate cash?
Yes.
And what was the answer for that?
Answer is
Wasn't it
customers paying bills on time.
exactly?
Mm-hmm.
So AR and your net pay is extremely important because that could be the difference of you having a lot of money available and very little money available. And you'd be surprised by how much that could actually impact your available cash flow or available cash. So I just wanted
Absolutely.
to add to that. Mhm.
No, that's great. We got a question from the member Athanas. He said, "What is the plan with the seller? Does he stay on 1 year as consultant? How do you structure it?" Again, we are going to need, and it's mandatory, that 12 could be up to 18 months, but 12 months transitory period where we have the seller on a consultancy basis. At this point, we're doing analysis on the business so far, so we haven't got into a stage of structure, though we do have a few things in mind. He's open to seller finance, which is great. We might
But hold
employ.
on 1 second though.
Mhm.
1 second though. So Antonas, I was just looking at your question. Now, any deal for you as a beginner, any deal, I mean, just any deal that you're going to do, period, just understand that any business that you acquire, certain business it's more true than others. But most businesses, you do not let the seller walk away, especially if you're talking about first, second, third acquisition. You're not letting them walk away. That should be a rule of thumb for you. It should be something that is automatic. Anytime you negotiate any type of deal, you engage the seller. When it comes to a transitory period, you have to ask for a minimum of 1 year. Now, a lot of banks will be okay with that, but sometimes when it comes to investors, and certain banks as well, they would actually want the seller to be locked in for the duration of the
Loan.
either note
Mm-hmm.
or loan or the investment period. So you have to be careful of how you're structuring with the seller because if someone bought my business right now and I walked away, they're not going to have a business, right? So
Right.
automatically, anytime you're structuring a deal, 12 months minimum, but throw out there, aside from that 12 months, the 12 months is actually the seller working in the deal. Then you're going to structure some kind of consulting or some kind of agreement, depending on the structure of the deal. Sometimes you have equity holdback. If it's an equity holdback situation, then the seller is more inclined to be a little bit more hands-on. Again, there's a lot of factors that goes into this, but you want to have some kind of you want to keep them tied into the business. And no bank or investor is really going to be okay with them walking away after a year. So you will typically have that 1 year, 2 year transitory period following a consulting agreement, maybe 250 an hour, however you want to structure it. But you're going to want them to be available at the end of a phone or video. And this is actually something that is a separate contract when you're going through closing. Well, when your attorney and your legal team, they're drafting up the PSA and all of the documents. This is actually something that's a separate document. This is not something that's included in your PSA, by the way. The agreement with the seller is going to be something separate. And if there's a wife that's involved, let's say if he's doing the financing and the husband is he's running the business type thing, you need a separate contract with both of them if you plan on keeping both of them. And in some certain scenarios, for tax purposes, the wife has to take a salary from the business. I mean, again, that was a lot to say, but I'm just trying to, give you guys a little bit of information here when it comes to structuring and keeping the seller on. You want to keep that seller on no matter what, because if they walk away within 3-6 months, you're really not going to have a business. And investors and banks really wouldn't like that. Anyway,
Great points.
that's up to you.
Yeah, no, great points. Keeping on with cash flow generation, we got annual client numbers reach around 2,500. Now, me, I'm a numbers guy. I want to understand how cash flow generated was the customer concentration. Keep in mind, client is a general term. That 2,500 could mean 2,500 different individuals, or it could be 2,500 times that the business is offering services, which in some cases could be to many of the same individuals, or a contract. So you want to dig a little deeper. We have an average lifetime value of $2,000 per client, which is great. Business services, they have leak detection and repair. It goes from 150 to 300. As you can see, drain cleaning, water heating installation and repair, sewer camera inspection, and trenchless pipe repair. And you want to understand the numbers and how do these contribute to the cash flows and the revenues of the business. Operations, the business operates as a turnkey operation and can function without the owner's direct involvement. The owner oversees the company's strategic direction and business development, while a general manager handles daily operations. There are dedicated departments for field technicians, customer service, and accounting. The current efficiency and organization of the business presents opportunities for growth in the market. Now, this is great. I've had businesses where I've cold called to generate leads, and I'm following up with the owner on a Saturday, and he's on the roof with 20 other guys. So there is a lot of involvement in the business. That's the type of things you want to avoid, especially with service-based companies. On the smaller end, a lot of the owners are also involved in overseeing the micro side of things. I want somebody who's focused on the macro, and there's specific individuals assigned for overseeing the crew. Geography, the business is located in Texas and serves clients in the greater Dallas-Fort Worth metropolitan area. Staffing, we got about 15 individuals. We have a general manager, 8 field technicians, which includes 2 licensed master plumbers. We got 3 customer service representatives, 2 accounting, 1 marketing, and payroll is about $750,000 a year. Now, I do have a whiteboard where I'm going to show you other individuals that we're looking to bring on, because it's not about the people you have. Eventually, as you grow and expand, there's other areas you want and need to tackle. Corporate governance. The owner owns 100% equity in the business, which makes it easier for us to negotiate. I mean, me and Nancy, we've negotiated deals where we have the husband and wife working as a team, and there's a business owner, maybe a silent partner, maybe the CEO owns some equity and he's a partner in the business. So there's all types of structures. In this particular instance, 100% equity to one individual. There's no external shareholders, and the motive of sale is due to time constraints. Now, I love it. They're looking to retire and spend more time with the family. That's great. We can employ some seller finance, help ease on that capital gain taxes. Now, ideal clients are homeowners and commercial property managers seeking reliable and efficient plumbing solutions. Now, there's a type of data you're going to need when presenting to investors. They're going to understand what's the client base, how many are there, how is cash flow generated. We tend to oversee data to such degree because we want to get in the financials very quickly and start shooting those offers. But we got to understand what's the story with the business and how it operates. Again, businesses are complex in nature, and to assume otherwise is technically ridiculous. Liabilities. The business has some inefficiencies in its marketing efforts and could benefit with a more targeted and data-driven approach. That's a value add. Additionally, the company has faced a few minor legal disputes, and I'm going to have to do more due diligence on this part. This could make or break the deal in regards to how severe it is. Regarding late payments from clients and subcontractor disagreements, which have since been resolved as far as we know, right? This is, again, business owners like to make their businesses look pretty on paper. They want to make them look good, and they're going to prop them up, and they're going to give you all the great information. Once we start digging, I mean, I've had a deal, medical laboratory, gave it to my financial analyst. He told me it was a 10. Let's go. But I told them, hey, hold on. We still have to do a legal due diligence. We gave the documents to attorney. Came back to me 3 days later. They had a pending lawsuit of $1 million. They didn't tell me about it. So those are the things you got to take a look at. Additionally, let's see.
Hey, Valentino.
Yeah.
I want to do something real quick. I'm going to message this seller, and if he's available, I want us to take this call live. It's the deal you and I were discussing earlier, the medical staffing.
Okay, let's go.
And I actually want to, I want to have it play out live. So I'm going to see if he answers.
Okay.
But proceed, just in case.
All right. So we might have a live deal in a moment. I'm not trying to get everybody's hopes up, but that could happen. Let's move on. It says the business could benefit from implementing more robust contract terms and legal protections to prevent future issues. Let me circle back to the comments. Let me take a look at what's being said. Great, exactly. No consultant will have the same knowledge as a seller. It's ultimately their baby. I agree. Also, what are your thoughts on differences on deal structuring when using banks plus seller finance and when using investors plus seller finance? I mean, you can use it all. There's really no problem. You can use it all as long as you can structure it correctly and the cash flows can support that debt service. That shouldn't be an issue. We're going to have our own section on deal structuring where we're going to go in depth. So don't worry about that. Now, the COVID pandemic impact, this is important. A lot of businesses went out of business. A lot of businesses lost 50% of their market share and customer base and weren't able to recoup. A lot of them are hanging by a thread. So you got to understand, how did COVID affect the business? COVID also positively affected other businesses. I've seen businesses where their cash flows went from 500,000 and 1.6 million to 2.4, and that's another deal we'll talk about. But it goes both ways. It could have impacted them positively. How? Well, maybe it took out a few competitors, and now they're the only guy in town. Now they get all the customer base, right? Many various ways, but you ultimately want to speak with the owner and figure out what it is and how it's affecting the company. The COVID pandemic initially led to a temporary decrease in demand for plumbing services as clients were hesitant to allow service providers in their homes. The business adapted by implementing safety protocols such as personal protective equipment, frequent sanitation, and contactless service when possible. As a result, the company experienced a recovery in demand and ultimately maintained a stable financial position throughout the pandemic. The business also expanded in its digital presence and online appointment scheduling, which has proven effective in attracting new clients and streaming operations. That is great. So it seems like there was some positive news to that. Now, if we take a look at the financials preliminarily, and we're going to go in depth in just a moment, you can see a few metrics. They're categorized in color code, with the first bar being 2020, second bar being 21, and third bar being 22. As you can tell, revenue has increased. COGS has also increased, and it's usually what happens. You're going to need more service, more equipment, more inventory, more product in order to service those new clients. Gross profit and COGS seem to be around the same. And then you have net income, which has increased as well, which is great. Let's dig a little deeper into the financials, and this is what I like. Now, this is, for the most part, 80% to 90% of the data. No, I'm lying. There's about 80 to 90% of the data you need to do a complete valuation on the business. I mean, you can expand on it, but anything further in that would really be like quality of earnings. So there's different sections. You got to understand. You got your financial analysis, you got your due diligence, you got your quality of earnings, you got your valuation, you got your structuring and pricing, and they all use different data types. Ultimately, you want as much as possible so you can complete it all. So we have revenue here, as you can see, it has increased over the years, and this is something I learned today with Nancy. Annually, when we're speaking about annual numbers, and let me pull up the data so I can show you guys. It's very important. But I'll continue to speak as I get this data. But when you look at businesses from an annual perspective, year on year, you tend to see a more linear growth. There may not be as much volatility, especially when it's going on an upright trend, right? Business is growing, everything's looking great. You know where you really see the red flags, or you really get a clear picture of the numbers, is when you take a look at the monthly. Let me show you guys, because this opened my eyes, and I'm going to be making a new financial model with charts and graphs included. And I'm going to tell everybody who does financial modeling or has a model of their own, use charts, use graphs. You want that visual representation, because that tells you a story that otherwise you couldn't see just with numbers. So just take a look at the numbers on the screen. COGS gone up, gross profit looks good, operating expenses looks amazing, D&A, I mean, everything looks good overall. Net income 455 to 568 to 687. I like that there's not a huge increase such as 500,000 to 1 million to 2 million, but we still got to take a look at that monthly data. Here's the expense chart. As you can see, we got discounts and adjustments, job labor costs, other job related costs, car and truck expenses, advertising, facility, utilities, insurance, and office and admin. And again, these are other items that you do want to take into account. Understand how the expenses are broken down. I mean, you could throw them all in one name, call it OPEX, and say 400,000, but until you truly break it down and see the data, you're not going to understand what it is. Here we have the expense chart part 2. We got salaries, we got payroll expenses, outside professional services, and we got taxes, penalty, and licenses. Okay, let me bring up this data because I want to show you guys in just a moment. Okay, take a look at this Excel for me. This is I posted this on Facebook as well. This is a business. I'm not going to show you the financials. I'm just going to show you charts. It's a business that has grown due to COVID. COVID grew it substantially. So you can see we have gross revenues and net revenues. They're on an upward trend. We have net income as well, pretty stable, upward trend, and wages, because it is expenses, is actually declined. So our wages have gone down, yet our cash flows have gone up. I mean, if you look at it from a year to year, especially when only looking at 3 years, there's really not much you can decipher from it. It looks pretty stable. But now let me bring it down to on a monthly basis. And let's start with this for comparison. Here we're going to look at gross revenues. Take a look at this. Gross revenues on the chart, linear upward trend, looks great. Okay? Great on paper. But what are the banks going to do? What are the investors going to do? They're going to break it down on a monthly basis. And now if we start looking at the chart, we can see it tells a totally different story. This gross revenues for 2020. Some big dips, some huge increases. Look at this. You got gross revenues for 21 again. And then 2022, you can see is in a decline. Look at net revenues. Look at that. Similar trend. Wages, sharp decline, sharp decline, sharp decline. Here, there's an increase. And then look at net profit all over the place. So you're going to be essentially using the cash flows of the business to pay off the loan. I'll tell you what, the loan amount does not change on a monthly basis. If you're paying $1 million a year, it's $1 million divided by 12. take into account interest, whatnot. 1.2, right? You're going to be paying that exact amount every month for the next 12 months. But what if your cash flows aren't the exact for the same 12 months? Yeah, the business could generate 1.8 million, right? Cool. We can service the debt. We got a 1.5 times DSCR, 1.7 times. Okay. But what if there's 3 months of the year where there's very minimal revenue and you're going to be negative? Now what? So you got to take a look at the monthly data and visualize that with charts. It gives you a more visual experience and it tells a different story. This looks great. Everybody likes to use these. Very simple, looks great, is on an upward trend. Let's take a look at it on a monthly. I mean, you got to take into account the seasonality of the business. Businesses have seasons. You know, some seasons people need more of something, some seasons people need more of something else, and that affects the way revenues are generated. Now, moving back to the deal, take a look at the expense chart. We got balance sheet, we got intangibles, beginning PP&E, ending PP&E, financial assets, current assets, other assets, inventory, current liabilities, beginning net working capital, ending net working capital, net borrowing, total liabilities, total assets, trade receivable, cash and equivalents, trade payable, other liabilities, financial liabilities. Now, why am I not going in detail? Because it's not a financial analysis video. We're just showing you merely the data you need to begin analyzing these businesses. You don't have a deal if you don't have all the data. That's really it.
Yeah, hold on, real quick. Go, do me a favor. Go back to the line charts.
Absolutely.
That was for the, which deal was that for?
Medical staffing.
Okay, great. All right. Now, what you're looking at here, so you just said, you know, you're giving them basic information that they need for the deal. But this is actually a step beyond. Brokers don't provide you with this. In fact, like I mentioned previously, our software Leaf Deck AI is what's really helping us produce a lot of this data here. And we're basically bringing it to the lead gen asset platform. So I just wanted to touch on that. And this is the kind of data that you need to actually visualize and understand a lot more what the numbers of the business is really telling you, what the story from those numbers. Because if you're looking at it purely on a numbers perspective on a Excel chart, yeah, you could understand, but looking at the chart visualized like this here, it really gives you a better understanding. And in fact, we're going to talk about this deal in depth some other time. But if you look at those spikes, this is a business that is heavily COVID influenced with respect to the valuation of it. So you're able to see these things when you look at the graphs. I just wanted to put that out there. It's very different than looking at the graph and looking at a Excel chart.
Absolutely. And I mean, ANSI is breaking the news to you guys early, but we are in the developments of an AI-powered software for not only lead generation, but business analysis and more. We'll touch on that on other videos, but you're going to start seeing the data we will be bringing on future videos is going to be vastly different and more in depth and visual to previous ones. And if you ask why, well, now you know. Circling back to the plumbing business. Again, you need all this data. You need to analyze it, not only on a yearly basis, but on a monthly basis. We'll be going over that in another video. Balance sheet, shareholders' equity, long-term liabilities, total liabilities and equities, days receivable, days inventory, days payable. Days receivable, amount of days it takes to collect on the receivables. As we can see here, the trend is usually between 32 to 33 days. Days inventory is the amount of days it takes for us to turn over inventory. It ranges anywhere between 18 to 22 days. And days payable, the amount of days it takes us to pay off our receivables, is anywhere between 45 to 50 days. Now, the rule of thumb when it comes to this data, specifically these three items, no, matter of fact, these two items, receivable and payable, usually comes down to a few items. First of all, it's going to be cash or credit. What do I mean by that? If customers are paying for the service outright in cash in full, your receivable is going to be way shorter because you're collecting almost immediately. If there's some payment plans, if there's some other structures, percentages, performance based, whatever it may be, then the days start adding up. And then here you can see that our days receivable is around 32 to 33, and there's the amount of days it takes from initial of the project to finish of the project for us to collect that money. Different businesses is going to take different days. It could be 30, it could be 60, it could be 90 days. Same with days payable. If you see higher numbers, it's usually because we're based on credit. There's more credit, there's more debt, as opposed to paying for things outright. These numbers seem pretty standard though for the industry. They're not really anything of a red flag. Other financial data, and this is the stuff I like personally. We got our PP&E as a percentage of revenue. And usually with a decline in PP&E, it means that the business is not investing a lot of money into equipment and other assets, right? We got other assets as a percentage of revenue, other liabilities as a percentage of revenue. We always want to be have assets greater than liabilities, as you can see. EBITDA for the 3 years. Our growth rate. Now, this is for the DCF, and I calculate this data. And I'm sharing it with you guys because essentially this is all you need to complete a DCF. You're going to need your growth rate. You're going to need your beta. You're going to need your corporate tax rate. You're going to need your interest on debt. I mean, there's other items such as WACC and discount rates, whatnot. But for the most part, this is all you can need. And then you can calculate the rates. Then you have your tax return documents. This is very important. Total income, gross profit, taxable income, and tax paid. Now, the key here is you want to correlate that data with what's present in the P&Ls. If it's vastly different, somebody's playing with the numbers. As for here, it seems like they are accurate. That means they're reporting taxes properly. Depreciation schedules, beginning PP&E, the depreciation, ending PP&E. Very important. How's the assets being depreciated? Now, you got to be careful with D&A, and this is why I don't use EBITDA, but there's a lot of number manipulation with D&A. They could just change the depreciation schedule, make it seem like they have more than what they truly have. Here we got employee wage data and deductions for 3 years, 2020, 21, 22, total salary, payroll expenses, deductions, and taxes withheld. Again, this data you're not going to see with a broker. I've rarely ever come across this amount of data, but it's the data you'll see with us. Now, moving on from this to the whiteboard. I'm going to be explaining a few things, and I'm going to be sharing some data that we did some analysis on the business. So let me bring this up for you guys. Now we did a basic business analysis, and I'm going to explain what these ratings are. So as you can see here, business rating, 8 out of 10 for operations, technology 9 out of 10, growth strategy 7 out of 10. Let me go in depth with this. Operations, the business has a well-organized structure with a general manager overseeing daily operations, and they have dedicated department fields. They have dedicated departments for field technicians, customer service, and accounting. The company's ability to function without the owner's direct involvement is a strength. However, there might be room for improvement in streamlining processes and further reducing operational costs. So this is what we're basing it off. Can the business run by itself? Does it have dedicated departments for each area of the business? And how much more can we improve upon? So there's always room for improvement. Nothing's ever 10 out of 10, but overall it's pretty good so far. Technology, they have modern technology like trenchless pipe repair, high resolution sewer camera inspections, and environmentally friendly drain cleaning solutions, which helps maintain a competitive edge. There could be opportunities to explore new technology trends to stay ahead of the competition. Now, there is a push for green, and we're going to talk about that. You can capitalize on it. But if you're using materials, if the way you're doing things or the way you're disposing of things can damage the environment, you could be open to lawsuits. So you got to be careful with things like that. Growth strategy. The business has plans to expand its market share through targeted marketing campaigns, focusing on digital platforms and local partnerships and increasing its commercial client base. However, the strategy may lack diversification and could benefit from additional partnerships or exploring new markets. It's a preliminary business rating, pretty good so far. What are the services? As we can see here, leak detection and repair makes up 18% of revenues. Drain cleaning makes up 30%. Water heater installation and repair makes up 27%. Sewer camera inspection makes up 12.5%, and trenchless pipe repair makes up 12.5%. So you got to take into account the services and the revenue, because if you're wasting a lot of money or energy or personnel in services that are barely bringing in anything to the business, you want to expand more on those that are bringing in the majority of cash flows. We have key personnel. We got Jane Smith, our operations manager. Again, all these names are generic. Tom Johnson, sales manager. Susan Brown, finance manager. Mark Davis, lead engineer. Additional personnel we could bring on is marketing director, human resources manager, a product manager, and customer service manager. Now, we do have some ideas for growth, and let's talk about them. So, give me just a moment while I bring this information up. So there's some market opportunities that provide several growth to explore, including entering new markets, offering different services, and targeting niche segments. One of them is green plumbing solutions. By us offering eco-friendly plumbing services and products, the company can appeal to environmentally conscious customers and tap into a growing market segment. Now, I know millennials, I know Gen Z, those type of individuals are very environmentally conscious. So that's a market share you can tap into. Smart home integrations, right? What is that? Precision Plumbing could consider providing plumbing services for smart home systems, which are becoming increasingly popular among homeowners. Again, are you adapting with the times, or are you doing things the old way? Commercial and industrial clients. Now, most of our clients are residential. So we have the option to expand for commercial and industrial. Expanding into commercial and industrial sectors could provide a new revenue stream and help diversify the company's client base. Now, we have our monthly insurance plan service and a cost to implement. We're going to touch on this. Now, I was speaking with some of the individuals of this business, and we were going over some ideas for growth and some strategies. Ansi, do me a favor and let me know if you could see the replay or the video on the live stream. I cannot see it on my end.
Yeah, all clear.
Perfect. So I was asking the owner, John, right, if he can tell me why he's decided to sell the business. Now, he's told me after running the business for about 23 years, he's looking to retire and spend more time with family. However, and this is very important, he believes that the company has potential for growth, and even further, under leadership of someone who can commit the time and resources necessary to take it to new heights. Now, we have a name for a company. It's called Mature Startups. But essentially, it is the idea of bringing startup growth to mature companies, which is not seen very often. You got to understand, these business owners took it to whatever limit they could. Now it's up to you to break that ceiling of growth, take it to the next level. And one saying we do have that is, it works amazing with them, is we look to honor the legacy of your business and build upon it. I mean, they've dedicated 23 years. John has dedicated 23 years to this company. Do you think he's going to sell it to somebody who's going to say, I'm going to just disrupt it, fire everybody, and change how things are done? No. You want somebody who can take what he's built and expand on it even further. Ansi, can you touch on that? And, you know, small business owners, small businesses, the business is their baby, right? They have that emotional attachment, and that's something you got to consider when negotiating.
Yeah, but that's only really something that applies to smaller businesses. Obviously, we're all close to our endeavors, especially when they are successful. But it tends to be more of a headache dealing with smaller businesses, 1, 5, 10 million range, that type of thing. Some 20-ish million dollar deals will have this effect as well when you're dealing with the owner. But when you're talking about these much larger deals, not only are these sellers a little bit less emotional, but they tend to be a lot more investor savvy. This translates into real estate as well. I've done small real estate deals where I've gotten paid $2,500 for that deal, and I've done really large deals up to 90 million, and I've gotten a percentage of that deal as well, albeit very small percentage on top of my salary, but nonetheless a percentage. And dealing with these, well, different sellers have different mindset. It's a lot easier for you to tell a seller, hey, look, I'm going to give you 50% up front, and the other 50% is going to, we're going to structure it this way. If you're talking about, 50 or $100 million deal, it's a lot easier to pull that off as opposed to a $5 million deal where that seller is banking on every dime. So that's going to be a lot different. But my experience is, smaller deals, they're going to have a lot more different mindset than larger business owners. And you're more so going to see that attachment on these smaller, lower level, lower middle market deals, $1 to $5 to $10 million deals, as opposed to a $50 or $100 million deal. Those are a lot easier to do, a lot easier to close, way less stressful, way less hassle and headache, as opposed to, doing these small deals. That's just my 2 cents on that.
No, that's great. Another item that we touched on with the seller was what's most important to him in the sale of the business. He told me he looks for a buyer who shares the commitment to provide high quality, reliable, and environmentally friendly plumbing services. And I mean, it just comes to the business and what they're offering, but ultimately sellers want somebody who not only see the vision, but wants to continue the vision. I mean, they pride themselves in providing high quality services. Why would you do otherwise? Now, we also touched on if he has a purchase price in mind and how does he feel about capital gain taxes. As we told him, a large portion of the sale price will go to capital gains. And we have structures that can help mitigate them. He didn't give us a price initially. He does have an idea, but he's open to negotiating based on a professional valuation of the business, which is quite uncommon. Now, regarding capital gain taxes, he says he's definitely interested in exploring structures that can help mitigate the tax burden. He wants to ensure that he's able to maximize the proceeds from the sale while also remaining in compliance with tax regulations. That's very important. I mean, if they're going to retire, ultimately you want to cash out with as much as you can, but not only as much as you can, retain as much as you can. I mean, cashing out for 10 million and keeping 4, it's not great, right? Instead, cashing out with 5 and keeping 4.2 or 3.8 is even better. So those are things you have to take into consideration. Now, I asked him if there's any key employees or management that he believes should stay on after the sale, and he told us which are the individuals that you could have seen on the whiteboard, which is Jane Smith, our operation manager. Jane has been with the company for over 10 years and is responsible for overseeing day-to-day operations, managing the production team, and ensuring that all processes run smoothly and efficiently. Tom Johnson is a sales manager, and he's been with the company for about 8 years. And he's been instrumental in building and maintaining strong relationships with the clients. He leads the sales team, devises sales strategy, and is responsible for achieving growth revenues. We got Susan Brown, who's a finance manager, and Susan has been with the company for 7 years, manages all financial aspects of the business, including budgeting, financial planning, and reporting. And lastly, we have Mark Davis, who's the lead engineer, and he's been with the company for 6 years and is responsible for overseeing the engineering team and ensuring that the company remains on the cutting edge of innovation and technology. Ultimately, this is a business, and like with any business, all people, all individuals are crucial to the success of it. If you don't have individuals that are providing 100%, or they're underqualified, we will have to replace them. But for the time being, it seems like these 4 individuals are the cornerstones of the business. They know it better than us, and they're doing great. So we're looking to expand upon it. Again, like we stated earlier, some individuals we can bring on are marketing director, human resource manager, product manager, and customer service manager. Let me bring up the mind map again so you can check this out. All right. Perfect. Now, from the list of services they provide, I asked which is most responsible for the majority of revenue generated. As you can see here, you can tell the percentages that they bring in, but you don't know how much they bring in. So let me share that with you. For leak detection and repair, they bring in about $180,000, which is 18%. Drain cleaning brings in $300,000, which is 30%. Water heater installation brings in 270, which is 27%. Sewer camera inspection brings in 125, and trenchless pipe repair brings in 125, which is great. So I also asked, after analyzing some data about the business, we noticed that they have about 2,500 clients on average with a lifetime value of $2,000. So I asked, how many of these clients are repeat customers? Again, I say the best sale is not the new sale, but the old sale. If you could get the same customers you have and get them to keep buying, either maybe the same product or service or new products and services, you're going to build that brand and customer loyalty. Look it up. Look at Apple. Every year there's a new phone, minor changes, but again, they keep buying. What is the client loss rate on an annual basis, and what is considered the lifetime value in terms of years or months? You got to take all those aspects into consideration. So I spoke with Susan Brown, who is a finance manager, and she told me they have a strong relationship with clients and a high retention rate. Approximately 70% of their 2,500 annual clients are repeat customers. This means around 1,750 clients come back to us, well, to them for their plumbing needs on a regular basis. I think that is great. Their client loss is about a 10% annually, which means they lose approximately 250 clients a year. However, they continue to attract new clients. As for the lifetime value, they calculated over a 5-year period, and their clients on average spend around $2,000 with them over 5 years. This includes the cost of initial job and any follow-up services or repairs needed during that time. Spoke with the lead engineer, and I told them, I got some thoughts, some ideas, such as the green plumbing solution, the smart home integration, the commercial and industrial clients. I want to know what his thoughts were on it and the average time frame to start generating revenue. There's a thing about ideas. You got to take into consideration the cost is going to take to implement it, and then the time is going to take before you can start seeing that bring in revenue. So he told me they're great ideas, and he appreciates the input, and here are his thoughts. So as for green plumbing solutions, offering eco-friendly plumbing services is a great way to cater to environmentally conscious customers. And to get started, they will need to invest in training their staff on green plumbing techniques and purchasing eco-friendly products. The initial cost for training and materials would be around $10,000 to $15,000, and they could expect to generate revenue from the service within 3 to 6 months, as the demand for green plumbing solutions is growing steadily. These are things you want to speak with, try to figure out, so you already know as soon as you buy the business what you can start implementing. Smart home integrations. Providing plumbing services for smart home systems is a promising opportunity. They will need to invest in training and purchasing necessary equipment. The estimated cost would be around $15,000 to $20,000. Given the popularity and increase in smart home systems, they could expect to start generating revenue between 6 to 12 months. So you got to take that into account. Again, this is why I tell you guys, do not overpay. You want to ensure you have enough cash flows, because this is not just money you're putting in your pocket. I mean, to some degree, but also you're going to have to reinvest into a business. You got to take into account, yeah, you have all these great ideas to grow the business, but ideas cost money and they cost time. You got to train the people. You got to either hire new people, you got to get materials, and you need to market that to start generating revenue. Yeah, Ansi.
Right. I got a message from the seller. Let's wrap this up, and then we're gonna come back and get on with the seller.
Great. We could close in about 5 minutes. Let me just give you guys some minor remarks. I also asked what are some of the most common issues they come across with customers in regards to residential clients: clogged drains, leaky faucets, running toilets, water heater issues, regular plumbing services. I asked them, what about if we create a upfront cost for service to repair, as they usually do, right? You get a quote for whatever it may be. But how about providing a monthly maintenance insurance plan for customers? Why? Why did I think of this? Well, first of all, a lot of problems that occur with equipment, machinery, systems, so on and so forth, is due to lack of maintenance. Over time, as you do not provide a maintenance, it gets worse until the point it does not function anymore. Then you're going to have to pay these large costs, and then here goes again another 6 to 12 months before you see another issue. How about capitalizing and generating some monthly revenue? Mark, the lead engineer, told me that was an interesting idea. And we will need to carefully evaluate the costs associated with offering a monthly maintenance plan, including labor, materials, and administrative expenses, to ensure that this is a viable option for the business. So I'm like, great. I spoke with the finance, Susan Brown, financial manager. I said, Mark mentioned to me we need to carefully evaluate the costs associated with offering a monthly maintenance insurance plan, including labor, materials, and administrative expenses, to ensure that this is a viable option. How much is this going to cost, right? Now, again, one thing that is very important when you're speaking with these individuals, when you're doing the calls, when you're in the meetings, is you cannot remember all the data. So there's two options you can go about. One way that I like retaining data is I record the calls and then I transcribe the data. And then I clean it up and write down all the information that is necessary. I mean, this is what I'm doing right now. And one of the reasons I like this is also because of privacy reasons. I mean, there's a fairly new deal. We really haven't generated that rapport with the seller to bring in live calls. But for the time being, I can share with you things we spoke about. Now, this is what you told me. Here's a ballpark estimate for each item. So I'm going to close on this. Labor costs. Assuming we need to hire 2 additional technicians at an average salary of $50,000 a year, the annual labor cost would increase to $100,000. Materials and equipment, estimating an average cost of $50 per client per month per material. $50 per client per month for material and parts. If they would have 100 clients enrolled in the maintenance plan, the annual expense would be $60,000. Administrative expenses, hiring 1 additional administrative staff member at a salary of $40,000 per year would cover the increased workload associated with managing the maintenance insurance plan. Pricing strategy, assuming a monthly fee of $75 a client with 100 clients enrolled in the maintenance plan, annual revenue generated would be $90,000. Marketing and promotion, allocating $10,000 a year for marketing campaigns and promotional materials to launch and maintain awareness of new service offering. So essentially, as you can see here in the whiteboard, this is going to be the total cost to implement this. It's going to be $210,000. 100 for labor, 60 for material, 40 for administrative, and 10 for marketing. And it's only going to expand as we grow. So you got to take into account the cost to implement these ideas and if it's viable, if it's an option that we can do. If not, hey, scratch that, find something else. Now we're going to leave this at here. This was a great video, provide you some insights in regards to plumbing. If you're in the plumbing sector, maybe you picked up some ideas, some information, some questions to ask the owners, and we will be following up with this deal with some financial analysis and whatnot. So we're going to kill it here, and we're going to start another live with this other business owner. It's going to be a live call, so join us. We'll drop the link.